The number of transactions with XRP numbering in the hundreds of thousands of US dollars has been increasing recently, along with another weighted average that I'm going to tell you about in this video. Sentiment, which is an on-chain analytics firm, recently published some information regarding XRP and what it hasn't done since May of this year. So we're going to look at some of the transactions, where they're going, and what this could mean for XRP in the near and long term. Also, we're going to take a look at Ethereum right now, because there are some things that is not going well for the Ethereum community. I'm going to go over 4 different segments that are recently being discussed, and none of which is good news, not just for Ethereum, not just for traders and investors, but for the cryptocurrency world as a whole. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. And before I get into the rest of this video, I wanted to remind you to click the link down in the description below that if you are interested in up to $300 worth of a free stock, ETF, or cryptocurrency, you can go and sign up for public.com. There's a link down in the description below. Fund your account with as little as $20 and make an instant return on your investment. All right, guys. Let's jump into it. $100,000 worth of XRP. That is a lot of money, especially when it happens in a single transaction. Well, recently there have been a lot more of those kinds of transactions, specifically with XRP. And Sentiment, which is an on-chain analytics firm, recently posted some of their charts and what is happening with XRP and the whales that are transferring this amount of XRP. Let's first start by talking about which wallets are actually doing this. Well, whales, those that already hold millions of XRP, are the ones doing these transactions. Now, these could be shifting XRP from one wallet to another, as well as buying activity, as well as when you see headlines like hundreds of millions of XRP being moved to something like Bitso. Well, that's basically the channel medium of Ripple funneling more XRP into their on-demand liquidity system, which of course is what powers RippleNet and all the banks all around the world, all the financial institutions that are utilizing XRP for cheap, fast transactions. That is where that is going, which means the usage of XRP for a settlement token as a bridge currency is on the rise. So whenever you see hundreds of millions of XRP being shifted around, specifically to BitGo or a few other exchanges, that's where it's going. It is being used for its intended purpose, and it's happening a lot more frequently than it used to several years ago. So not only that, I see other investors looking to place bets on XRP and thinking for the long term, because this price action is obviously way down from its all-time high. It's down just like the rest of the crypto market. People are placing their bets, anticipating that XRP is going to get its regulatory clarity from the SEC at any time in the next 1 to 7 years. I'm kidding. I hope it'll be much, much sooner than that. But nonetheless, there are whales that are anticipating this to go sky high once that clarity is induced. And of course, if you hold XRP, you no doubt are following this case as well. The one thing I wanted to point out about the transactions is that it's not necessarily the number of transactions worth $100,000 of XRP that was the headline maker. It was actually the sentiment. In other words, the nearest weighted average of not only the dollar amounts being over $100,000, but the total number of XRP and its recent movements being weighted into what Sentiment calls a sentiment aggregate. At the end of July, the last 2 weeks of July hit its highest point than it's seen since May. And not only that, it's been trending in an upward direction. So you can take those 2 pieces of analytics and take a look at, well, there's a lot of people that are thinking the price of XRP probably only has northward to go from here. But of course, that still remains to be seen, because Bitcoin, well, it could always go to $7,000. And if that's the case, XRP and pretty much everything else is going to be a massive buying opportunity. And if you've been following the Ripple versus the SEC case, that you know there's a lot of information that has been talked about regarding Ethereum, its co-founders, and how they're connected to then chairman of the SEC, Bill Hinman, and Jay Clayton, among other things. But Ethereum right now, it's a little bit different than Ethereum that was several years ago. And there is one such headline that is very concerning that kind of proves it. So right now I'm going to go over the 4 things concerning Ethereum that, if you are in the cryptocurrency world, should concern you. Regardless if you like Ethereum or don't like Ethereum, these should all concern you. Now, first of all, if you use Ethereum and you're sick of the high gas fees, many times over the past several months it was talked about moving to proof of stake would actually decrease those gas fees. Well, recently some of those in the higher rankings of Ethereum said it doesn't look like this move to proof of stake is going to have any effect on gas fees. gas fees will still be extremely high, even on this new proof of stake system. Strike number one. Strike number two, the miners that are mining Ethereum right now are growing even more in number in terms of those that are not a fan of this merged proof of stake, and they intend on forking Ethereum to keep the original proof of work Ethereum intact, continue to mine it, and of course not use the new proof of stake system. And then there's this. Just the other day, the original architect of the DAO structure, the Decentralized Autonomous Organization, one of the original architects from back in 2014 who worked for the Ethereum ecosystem as a communications officer, he is actually stepping down, and he wrote a letter to the Ethereum community before one of their biggest conferences saying he's no longer going to participate in it, and in fact, he's stepping away from the Ethereum ecosystem as a whole. He was extremely disappointed in how Ethereum has essentially become what he called a circus of centralized NFTs and Ponzi schemes. And you know what? He's not wrong. It's exactly what it's turning into. The fact that anybody can go create a token or an NFT or a decentralized autonomous organization in a matter of minutes on the Ethereum ecosystem, well, there's a lot of pluses to that, but there is a ton of drawback. Because as a lot of people are now correctly calling Ethereum essentially a controllable asset because of venture capital firms and what I'm about to talk about next, government control. Well, he named a lot of those reasons as to why he's actually stepping away from Ethereum, because he said the original vision from what he had for Ethereum and its ecosystem and its decentralized nature is almost unrecognizable today compared to what it used to be. And I'll go even further, and this one, the most important, strike number 4, this one about losing its decentralization and essentially be controlled by not only the possibility of hedge funds, not only by the possibility of whales that control the massive voting rights in this new proof of stake system, but now government controls. So recently, you've heard about Tornado Cash, which was a cryptocurrency mixer that was seen as essentially something that can be used to launder money, hide transactions, and the such. Well, Matthew Green, who is a professor of cryptography who works for Johns Hopkins University, recently tweeted something out, and it's been getting a lot of exposure. And this one should concern literally everybody in the cryptocurrency world. His tweet cited another post that showed Ethereum, which is the largest Ethereum mining pool, is no longer mining transactions or blocks that have had transactions related to Tornado Cash or its associated wallet, which means the OFAC office, the United States Treasury Office, the one that puts sanctions on Tornado Cash and its associated wallets, is now reaching into Ethereum mining pools. But here's the concern, that if mining pools, and large mining pools at that, can be persuaded or re-educated into not mining certain transactions into blocks, well, that's essentially the same as government control, because now you have a programmable money system that says, listen, if you have a stablecoin or you are using a cryptocurrency that is involved with this particular wallet or this particular protocol or platform, and that can be frozen by the stablecoin or by the Ethereum miners or even these proof of stake pools, and they can essentially be frozen out by miners or those that control the stablecoin, well, now you have a system that essentially can be controlled by governments. So as it looks right now, it is not looking good, because Coinbase has said they will not necessarily obey the OFAC office in terms of sanctions. They would rather just release all the staking and stop doing it. But the CEO of Coinbase, Brian Armstrong's statement about that didn't exactly give a lot of confidence, being that he said, I think we would just disband all the staking and not bow to the censorship controls. So this is what a lot of the headlines recently that have been concerned about Ethereum's move to proof of stake, and is essentially giving up control and any decentralization that it had to other entities that could control not only stablecoins like Coinbase can with their Circle stablecoin, but can actually control the rewards given to those miners and to those stakers that are going to freeze out transactions from blocks that do transactions with Tornado Cash, its associated wallets, or any other transactions that become a sanctioned entity in the blockchain. And that was a very long-winded way of saying that Ethereum could just be the first of a number of issues right now with cryptocurrencies losing its decentralization and essentially bowing to government controls. Not only losing its decentralization, but losing its ability to be censor-proof. And in my opinion, there are very few cryptocurrencies that can actually withstand a lot of that. On this channel, there's a reason that I talk about Bitcoin and XRP, because I believe those are two of the strongest built cryptocurrencies to withstand centralized control, government control, or any other control. So as Ethereum ramps up to its merge to proof of stake, well, these are just some of the things that are now not looking so hot. well, along with the price, of course, that has tanked right along with everything else over the past couple of days, dropping several $100s. Ethereum is now in the $1,600 range. Everything else dropped about 10% as well. So the rest of this weekend is going to be interesting. Monday and Tuesday are going to be incredibly interesting. There's a lot of people that cover the stocks market as well as other commodities, and they say Monday could be a very, very red day. All right, guys, I want to thank you so much for watching this video all the way to the end, for smashing that thumbs up button, and as always, I'll see you guys on the next video.